voice is always there in the back of your head. Just one more time, then we'll stop.
Alright, back. Today is the 23rd of March, today being a Monday. And in relation to the economic calendar, we had no high impact news. So we're just going to go over this trade that I ended up taking today during the PM session, just a little shortly after the 1400 candle. So I only took one trade today, so, well, I was going to say so this should be fast, but if I only take one trade, it's still going to be long. But this video should be relatively quick. Reason why being is because we simply just didn't really do much of anything that was interesting today. So we're just going to take a look at the higher time frames overall to just get a perspective of what we're working with at this current point in time. So Monday's trading, first day of the week. We have the Monday opening right here, and then we have that deliverance up towards buy side, engaging with these series of up close candles, which you can deem an order block. And yeah, what I was observing was the mean threshold of this order block. We don't actually end up engaging with it. I don't know how short we fall of it, maybe a point or two. Yeah, 2 points. We fell short 2 points, and yeah, I was observing that on the lower time frames to see if it could be engaged with for a point of inception to occur, but that did not end up happening. So we have the hour 4 chart right here. Not really anything too interesting. We have the 1800 opening right here. Yeah, so hour 4 does not really much, to be quite honest. Hour 1, you have the 1800 opening, and then you have this nice consolidation creating a TLP right here. So you have the relatively equal highs. So Asia forming relatively equal highs with this high right here, so that is pretty nice. And then you have London being the low of the day. You have your London standard deviation. We see this is where the day ends up capping off at in relation to the bodies. And then you have your -4, -4.5 all the way up there. We have this retracement. So we have the lunch session retracing into this hour 1 BISI. And I wanted a long from here, except I just wanted to see the 1300 candle engage with the 1200 candle. That did not end up occurring, but we can see it a lot more clearer on the lower time frames. Looking at the 15-minute, really well and truly all the same. 1800 consolidation. The trendline phantom is very, very clear here. It's very, very nice looking. And I actually didn't have a London projection here. Okay. Well, Trump completely just, invalidates it, but it projects for this high that resides right here. And yeah, I'm pretty sure I can just jump straight into it. So this is the MNQ chart. I don't have any annotations on this chart because I normally annotate on the NQ chart. The only reason why I executed on the MNQ chart today is because we were rather volatile today, and I also didn't really like this setup to the fullest of extent, as well as the fact that there was reasonings for me not to trust the setup to the fullest of extent. I was right in the reasoning or the speculations I had because we simply just consolidated around my entry for about, 25 minutes. I'm not quite sure. So we're just going to take a look at price action rather quickly. So yeah, we have 705, just instantaneous deliverance straight towards buy side. And yeah, we have the 930 opening residing right here. So 930 opens, and what I wanted to see occur for the day was price action come, engage with the mean threshold of the daily order block, and then a point of inception to occur for sell side deliverance. And then I would have been looking for price action to come and engage with the devil's mark that resides just right here, or the equilibrium of the range. So they're both relatively close to each other, but devil's mark is first. So of course, just look to collapse the trade once it engages with that right there. So I was looking for that. That would have been in an ideal world, but of course, that did not occur. So yes, ahead of the 930 opening, we have this point of inception that occurs here, standard deviation projected down towards sell side, and you have your -2, -2.5, and then you have your -4, -4.5 that resides right here. So I would have been open to taking longs a little shortly after the 930 opening if we did ultimately deliver all the way down to the -4, -4.5, but the -2, -2.5 was utilized for a smart money reversal to deliver up towards buy side, and I wasn't interested in taking longs. I wasn't interested during the AM session. I wasn't interested in taking any positions within this range. So within this low, within this high to this low, I wasn't interested in taking any trades at all until either of them were engaged with. I simply just wasn't interested because we had just had very, very explosive expansion. Consolidation is occurring right after this expansion, and on the higher time frames it's going to look like a retracement, and that's what we end up having at the 12 a.m. We have that retracement into the hour 1 BISI, and I did want longs here, except I wanted to see a couple things occur. So we have the AM session coming to an end, and then we have that deliverance down towards sell side. Then we have the New York lunch session starting somewhere around here, the segment of price action, and then we have the high of the New York lunch session formed, and then deliverance down towards sell side, and we engage with the hour 1 BISI high. And what I wanted to see was price action come and engage with the devil's mark and the equilibrium, and this equilibrium is actually basically from the low of the day all the way up to the high of the day. So I was looking for price action to perhaps deliver underneath that, and maybe a point of inception for buy side delivery could occur. Now we end up having lunch falling short of engaging with this devil's mark, and I didn't mind this. I actually quite like this. We fail to engage with it, and then we end up having the inversion of this SIBI that resides right here. So we're seeing signatures of order flow shifting. So we end up delivering back up into the range, delivering above a premium from this high all the way down to this low, and then we end up meandering around a little bit. And I actually very much like the look of this because we're just meandering around, essentially waiting for the right time, basically waiting for the end of the lunch session so that we can then project our lunch high and lunch low out in time. And that's what ends up occurring. We have the 1300 opening, and then what I wanted to see was the 1300 candle come and engage with the New York lunch low during the New York PM session or before, but we don't end up seeing that. Both ES, YM, again, I'm pretty sure I mentioned this last video. I didn't check Russell. Okay, Russell didn't take it. So I don't look at Russell that much, to be quite honest. But sometimes when stuff like this occur, it does lead me to saying, okay, we turned around here. I was looking for a point of inception to occur here. You know, maybe one of the assets offered the cracking correlation, but we do have to remember that this is what our 15-minute looks like. We have an expansion. We're essentially just creating a bull flag right now. Bull flags are just like this. We have explosive buy side delivery, and then we just meander around within this range. And the engineering of buy side or sell side could occur. Don't mind what I'm drawing. The drawing's absolute rubbish, but normally with a bull flag, what retail would look to see is, again, another expansion towards buy side. And the way that it's measured is in terms of, okay, if we done this for the first, if we done this before the bull flag, that's what the expansion looked like. They'd be looking for that to occur again once we begin expanding towards buy side. But a lot of the time, this ends up being manipulation in terms of if we are engineering orders at sell side, if we're engineering orders at buy side and narrative is also in play and there's alignment occurring, we're going to end up engaging with these highs, and then it's going to be a point of inception for, in fact, sell side deliveries. So a point of inception would then occur, and then we end up coming and running down sell side. So yeah, there would be a form of rather clean sell side that would have remained down here, as well as the fact that with a bull flag, we don't always end up seeing price action returning back to the equilibrium of that range. And what this ultimately means is that fair value just has not been offered. But I have strayed so far off topic. So much for a short video. I have no clue where I was, to be quite honest. Yeah, we don't end up seeing the New York lunch being engaged with right here. And yeah, we don't end up seeing the New York lunch being engaged with right here, and then we have that deliverance up towards buy side. Now, we're delivering up towards buy side. I don't officially know that we're leaving this New York lunch until the 1333 candle, because we have the New York PM session opening right here, and I was expecting, okay, maybe we can come down because we left this BISI unfilled right here on the M1. So we left that busy unfilled. So I was thinking to myself, okay, maybe we can, maybe just come down, engage with the New York lunch low and the Devil's Mark, and then we can see a point of inception for buy side to the New York lunch high. Would have been very clean. Would have been very clean, but that did not end up occurring. Because look at all of these highs. On the M5, these are just all equal highs. But yeah, I'm straying so far off topic. We have the New York PM session opening up right here. And I didn't know that we weren't coming back down until the first presented fair value gap of the PM session opened. Reason why being is because, this candle just delivered straight towards the buy side very aggressively. All through these highs that reside right here. And then we formed the imbalance. So I was like, okay, it appears we're going to maybe reach for the New York lunch high. And that is what we end up doing. And I wasn't open to taking shorts here. What I actually wanted to see was a retracement back down into this range, engagement with the PM session first presented fair value gap, because it aligned with an M5 BISI. And then I was ultimately looking for price action to continue delivering up towards the buy side in alignment with the standard deviation. So I would have been looking for the equilibrium. So this range would be the high all the way down to low, because you always have to be aware of the type of conditions you are trading in. And I say that taking this trade, I don't know if I've even mentioned this. Looking at this trade in hindsight, it's actually a pretty poor trade, but we're going to get into it. But you always have to be aware with the type of conditions you're looking at, because if we're in a consolidation, it's not unless you have caught the high or low of the consolidation, it's not a guarantee that we're going to engage with external liquidity. So you'd be looking for internal liquidity or internal PD arrays in order to look to take profits at or offload your position in terms of taking partials X, Y, and Z. But besides all of that, I was looking for longs from the first presented fair value gap from the PM session. We do end up seeing this, but I didn't end up getting an entry here. So we have the formation of an order block that resides right here. And we have a series of down close candles, series of up close candles, and then we also have the inversion of this BISI that resides here as well. The inversion was a little bit sloppy, but it worked overall. And then we have that deliverance up towards buy side. I simply just opted not to execute off of it. I wanted to see price action return to the order block formation, but we didn't end up having that. Neither did we return into this BISI right here. Now, the reason why I say that this is a rather poor setup. It's not the best of setups that one can take. If I was in this trade, I would have been looking for the equilibrium. We didn't end up engaging with the equilibrium. The only reason why I was open to engaging with price action with the knowledge in mind that we didn't engage with the equilibrium is because ES ended up engaging with the equilibrium. So you have a form of a cracking correlation right there. ES engaging with the equilibrium of a respective range in relation to NASDAQ, and NASDAQ failing to engage with that equilibrium. And then we also had a cracking correlation with YM right here. And this is a 15-second order block. I decided not to execute off of it because the cracking correlation in relation to the high and the highs was presented with YM. And the thing is that I'm not going to get into it too deeply, but there's YM, there's ES, and there's NASDAQ. And then there's also Russell as well, but Russell's Russell, yeah, so there's NQ, ES, and YM. ES is comprised of 500 assets. NASDAQ is comprised of NASDAQ is comprised of 100 assets, and YM is comprised of 30 assets. Now, it's a lot more meaningful when ES is the asset to be diverging away from the other two assets, because it's comprised of a lot more assets. It holds a lot more value compared to the NASDAQ and YM, as well as the fact that ES is a lot more smoother compared to NASDAQ and YM. In terms of NASDAQ and YM, their moves are very much over exaggerated, but straying very much off topic here. So I decided not to execute off of the 15-second because YM is the one offering that cracking correlation. I wanted to see the M1 follow suit, and that's what we end up having. I wanted to see the M1 form the change in stain delivery. So that's what we end up having. And the reason why I was willing to engage with this is because the 1407 candle here, being the candle that confirmed the change in state, was rather convincing in terms of the displacement we see down towards sell side, also the formation of that imbalance that resides right there. So I did have my limit at the I did have my limit at the order block, so the series of up close candles, but ultimately just decided to market execute because I decided to size down due to the fact that, okay, overall the day in terms of like, we haven't done much, as well as the fact that I don't trust this idea to the fullest extent. The only thing that's really in alignment is, okay, we have the equilibrium cracking correlation and then the YM cracking correlation that I wasn't too fond of, but then we are also inside of the -2, -2.5 standard deviation that we have anchored from these segments of price action. And then I'm also looking at the fact that, okay, we have this devil's mark residing here for the PM session, and then we also have the devil's mark from this segment of price action also not delivering into the equilibrium of the day's range overall, that's basically it. So decided to execute off of it. A reason why this trade was poor is because what ends up happening here is we end up returning back down to the segment of price action that I was looking to execute off of initially, where we did not have the return back into the bodies of the order block right here, and we did not have a return back into this imbalance. We end up returning back into it, but I was not paying attention to that. What I was paying attention to was these series of up close candles that resided right here. Now this standard deviation is a 15-second standard deviation. We end up seeing the -3.5 being utilized, and then I also had an M1 standard deviation as well, and it was projecting for this low and then this segment of price action that resided right here as well. So yeah, price action comes, ends up tagging me in, and I'm sitting in drawdown for a little bit. And as I'm sitting in drawdown, I'm taking a notice as to how price action is printing. We're not moving away from what I considered a point of inception. Clearly, it wasn't a point of inception, but at the time, I was believing that this was a point of inception. And normally, at a point of inception, we're going to leave price action very quickly. In fact, let me even... So I was observing, I don't know if I just mentioned that, I was observing price action here on a 15-second change in staying delivery, and I was not really too fond of executing on this, which is the reason why I waited for the M1 to follow suit. But what should end up occurring is that, okay, point of inception occurs right here. We do have a little bit of distortion, but we should see very fast deliverance away from our point of inception, as well as signatures presenting itself of whatever order flow in terms of the direction. So in this case, it's bearish order flow. We're delivering towards sell side. We're seeing bearish signatures occur in price. So we have the change in state, and then we have price action engaging with that change in state. And then we have an imbalance being formed here. What we end up taking a notice to is the fact that we have no candle closure inside of this imbalance, and then we immediately displace away from it. That's what I'm normally looking to see at a point of inception, but that's not what we end up seeing here when I enter my trade on the M1. What we end up seeing here is price action being very lethargic, as if it doesn't want to go anywhere. So I'm thinking to myself, am I going to be looking at a high resistance trade now? We end up having a cracking correlation between these two highs right here from the engagement with the order block. So I ended up managing my stop loss right here, and I was playing with my stop a little bit, so I ended up putting my stop loss at the bodies once we ended up having this candle, the 14-16 candle. So the way my stop loss movement normally works is it's whatever price is doing, in a sense. If I'm seeing signatures that are in my desired direction and they're now, in a sense, like points of defense that I am looking to be utilized to continue delivering in my desired direction, it's permitted for me to move my stop loss, in a sense. So stop loss ended up just being moved to the body of this candle. Then I ended up moving it back up here when I took a notice to the fact that, okay, we're not utilizing this SIBI inside of here, and we're just meandering around a little bit. And I was also observing this SIBI. So we had the inversion of it, and I was going to manually close when we had the inversion of it, but then I thought to myself, I might be looking at a high resistance trade. Let me give it some time to breathe. And then we end up reclaiming this again. And the reason why I moved my stop at the 14-16 candle when that candle printed is because it's delivering very aggressively away from this SIBI here. We have devil's mark just under it. So I was looking at that, okay, yes, it's time to move now. It's time to, deliver down towards sell side. But yes, that was not the case. We end up just meandering around for a rather long time. And I ended up getting stopped out of the trade I ended up getting stopped out of the trade right here, so I ended up moving my stop, jamming it right here, as we came and delivered into this BISI right here, because I said to myself, okay, this BISI is just printed. We had a cracking correlation right here. Then we have a series of down close candles, and then we have series of up close candles. If this BISI holds, and I'm seeing signatures of bullish order flow on the 15-second, we're just going to absolutely displace right through this high and this high and this high. And that's what we ended up seeing. So I ended up, once I'm seeing bullish order flows, so take a look at it actually. Yeah. So this is the deliverance down. Oh, let me just grab it. So this is the deliverance down into that M1 BISI. And what we end up having is just this very bullish candle. Devil's mark on top of it. We're about to change the sustained delivery on the 15-second with this formation of the order block. So once I seen that, I literally just jammed my stop up here because I kind of just knew it was clipped type of time. And I knew it was just going to displace up towards buy side. And yeah, that was basically it for the day. Price action, this is very ugly, but we end up delivering down towards sell side. We still don't come and engage with the 1330 candles, so the New York PM opening. But yeah, that's basically it for the trade.